Speaker is the right person. She's, of course, one of my most favorite speakers of all time, but the right person to talk about how can we serve more and what does service really mean in the year 2022. We have a plethora of new challenges. How do we navigate our way through it? Ladies and gentlemen, she is presently the chairperson of the Pakistan Stock Exchange and the Karandaaz. She's also formerly served as the Federal Minister for Finance and the former governor of the State Bank of Pakistan. Ladies and gentlemen, please welcome Dr. Shamshad Akhtar.
Assalamu alaikum and Bismillahir Rahmanir Rahim. Honorable Governor Sindh, Honorable State Minister and the Chairperson of the Board of Investment, all the distinguished corporate leaders and thought leaders. It's a pleasure to be here. I'm sure there's a lot of learning that we will all have talking to each other. I was asked by the chairperson of the Board of Investment to talk about climate, so I'm going to be focusing on that, but taking a detour in on different subjects. So we're talking about future. We face future in time of uncertainty. And I think the economists are known to get it wrong all the time. So I'm not going to be a predictor at all. Global uncertainties have compounded following every episode of crisis from 2008, economic and financial crisis, to health crisis now in 2020. Pandemic has been a rude awakening given unprecedented losses of output and reversal of development gains. With climate scenario now worsening, the next looming crisis is to emanate from climate change. So that's the only prediction world has consensus on, which has, of course, no respect for borders. Scientists warn us of the gravity and the severity of climate tantrums as rising temperatures, sea level rise, floods, intensity, and melting glaciers across our corridors will play havoc and devastate anything in its way. And I hope before that we can take some action. The Global Climate Risk Index ranks Pakistan as the 5th most climate vulnerable country with 152 extreme weather episodes. Over the past decade or so, Pakistan's greenhouse gas emissions grew by 50%, reaching over 200 million tons of carbon CO2 in 2019, and by 2030, it will rise by 540%. We don't take a lot of responsibility for the global greenhouse gas emissions, of course, but in our neighborhood, we have to protect ourselves. Energy and transport are largest emitters, followed by industry and agriculture and land practices. Air pollution is costing 50 billion, not to mention the health issues we all face. Textile, our largest industry and exporter, is globally known to contribute 6 to 8% of emissions, and 70% of it is attributed to upstream energy-intensive material processing. In wake of these threats and vulnerabilities, cost of climate inaction is going to be larger than the cost of climate action. Over the last 2 decades, climate change in Pakistan resulted in more than 0.5% per unit of GDP losses, resulting in $3.8 billion of annual economic losses. These figures are from the Economic Survey of 2020. Environmental degradation alone requires climate adaptation in the range of 7 billion to 14 billion per year. And by the way, the 3.8 billion figure was also annual loss. So meanwhile, share of public expenditure deployed for climate change is barely 6 to 7%. Public investment choices are difficult, but to the extent I am a voter, I would vote for an allocation for climate because nobody will be safe from it. Only a segment of corporate sector subscribes to sustainability reporting, and few of them are committed to zero emissions by 2030, and that has happened during the COP26. As yet, no Pakistan regulatory agency requires borrowers' climate disclosure. So future can be safeguarded by assigning priority to sustainability and recognizing that meeting the needs of present without compromising the needs of future generation has high payoffs for nations and requires political and corporate leaders to have an eye on long-term growth and probability and profitability and to safeguard the planet and people. A host of measures, if adopted, could be game-changing. First, introducing fundamental amendments to policy, legal, and regulatory frameworks. I know we don't have working parliaments in Pakistan, but I hope we better get them in order before the climate havoc falls on us. So introducing amendment to policy, legal, and regulatory frameworks have to recognize the virtues of sustainability and has to offer industry incentives to invest in safeguarding environment and our ecology and biodiversity. Second, mainstreaming and integrating sustainability with emphasis on allocating funds for climate adaptation and climate mitigation across our planning and budgetary processes. The third important thing is to develop a robust financing framework through resource mobilization to generate the much needed fiscal space, leverage private finance, and mobilize green, climate, and sustainable finance if needed with supportive MDB, leveraging, or domestic credit enhancement. And now we have an agency in Pakistan, Infrazamin, which has been promoted by Karandaaz, one of the companies that I am affiliated with. Fourth, we have to strategize and effectively manage crisis prevention, which has high payoffs and is less costlier than having to deal with containment and rescue operations or deal with its climate change consequences that causes, among others, food insecurity to damages of infrastructure. So these measures can facilitate Pakistan raise its investment and saving levels. Investment GDP ratio has been very volatile in Pakistan. It has declined from 17.3% in fiscal year 18 to now, currently in fiscal year 21, to 15.2% of GDP. Investment saving ratio may have narrowed lately, but is not sustainable as the saving rates are quite low in Pakistan, and it's something nobody has succeeded to break, the nexus. And of course, the low investment saving is really the underlying cause of our historic, unsteady, and unsustainable growth path. So investment and doing business constraints have held back Pakistan's infrastructure spending now to around 2 to 3 or 4%, depending on which source you look at. And this is well below the requirements of the country, which are in the range of 8 to 10% of GDP, recognizing that infrastructure deficit is very steep in Pakistan, given years of neglect and demographic pressures, which is the only certain thing in future we will face, which is the population growth. Pakistan needs to, of course, double its investment GDP ratio to 30% to enhance quality infrastructure that implies investing in sustainable, climate resilient, and inclusive infrastructure to protect our nature and ecology. Significant pools of equity and long-term institutional funds are now seeking to invest in ESG-compliant ventures to fulfill the growing appetite of the shareholders and investors to fulfill their targets for net zero emissions and aspirations for cleaner world by some of us. So what are the key drivers of climate change? Important to recognize to be able to address. We have to decarbonize our economy ASAP. As corporates choose frontier technologies and renewables as alternate source of energy and investment in grid transformation to accommodate variability of energy supply. Rather than run back and forth for oil, gas, and commodity price cycles, etc., renewables is the way to go. And we have a renewable policy of 1990, which has not been effectively implemented. Of course, right carbon pricing and taxation regime are critical. Energy conservation and efficiency, which is in our hands, and moving to a carbon capture and storage, which is of course far from us, and other innovative technologies which require, of course, higher investments, but will help reduce industrial emissions to near zero. I was very encouraged recently to listen to the export-oriented top companies because of the pressure coming from the international markets that they are already moving towards, forecasting to move towards net zero emission and investing in renewables. The second is, of course, the leveraging of the global green and climate finance resource pools. We have done very little on this frontier. We have, of course, launched a green bond and clapped our hands, but not gone beyond that, as I see. So it is, these resource pools are critical for raising investment in environment, industrial pollution, water sanitation, or biodiversity protection. If properly structured with loans and credit guarantees by the government, MDBs, and third-party arrangements, we can generate financial returns and yield positive social and environmental benefits. It's a bit of a hard work, which we shy away. We go and tap our bank and borrow loans which do not safeguard us from the climate change crisis. So the third is that accounting firms and regulators, they are very critical in this whole process. They need to promote enhanced risk assessment frameworks for financial institutions, among others, by requiring climate disclosure and assessment of materiality of climate-related physical and transition risks associated with alternate climate scenario. And it is very much within our reach to understand what these alternate climate scenarios can emerge to be. As you may have heard, there is a global network of greening financial system, and the financial standards body in recent years have advocated central banks adopt standard prudential regulatory regime that distinguishes between the green and the brown investments and assigns appropriate risk weights to loan portfolio in accordance with their GH emission contribution. This is not taxes, but this is just getting things right. Fourth is to effectively leverage long-term risk capital and debt financing, developing a well-balanced and diversified financial sector offering level playing field to all segments of markets and assets. Now, for years, we keep on begging and shunting to Islamabad to get subsidized lending through below-market refinancing. Discriminatory tax treatments of assets and lack of judicious powers have been assigned to regulators, and weak intra-sectoral coordination exists between banks, securities markets, and insurance sector, all it does is to create distortions and make our lives difficult. So banks end up holding captively the public savings and offering them on returns that government is willing to give them, and they invest in government securities, and rest of the private sector is underserved, the SMEs, and housing market is now being served overly generously. And we shy away in the banking system from deepening financial intermediation. A lot of nudging going on from the central bank, but we could do more. Let me turn to a topic which is now close to my heart, which is we need to nurture capital markets. It requires government to first liberalize insurance sector that for years suffers from state domination in ownership and access to sectors' long-term liquidity is held by the government. Hence, low insurance coverage to population and insurance premium below 1% and low deployment of institutional funding for stock markets. Future, however, holds promise because Pakistan Stock Exchange is transforming itself to promote sustainability. Governance structure of PSX change following its corporatization and demutualization. It paved way for listing of PSX and transfer of its shareholding to foreign and domestic institutional investors, and induction of independent board of directors and a professional manager. Alignment and coordination between PSX, clearing and settlement and custodial services and commodity exchange reinforces our business development. The ecosystem of PSX is maturing as it is to launch national trading and surveillance system with enhanced regulatory framework, which will attract the FDIs too into our markets, the foreign portfolio, sorry. Fiscal year 21 has generated, after a long time, profits at the PSX and distributed dividends. Regulatory and audit frameworks are being enhanced so that foreigners draw comfort investing in. Growing confidence in our markets has helped raise a number of debt and equity issuance recently. A new growth enterprise market has now been operationalized. So both the main board and the GEM offer full disclosure. It offers options for enter and exit. Analysts see promising increase of the Karachi Stock Exchange Index by 15,000 to 20,000 in this year. And we, of course, count on doubling of market cap by stock exchanges, provided there is macroeconomic stability and investor base can be harnessed by removing all these preferential treatments to other segments of the financial market. I will conclude by also announcing that we are working at the stock exchange to ease the options like access to RDA, and hopefully we can offer Asan mobile options for the investors to open their account easily. PSX has also been working with a number of accounting entities to work on the ESG. Once we get the corporates to have environment, social safeguard, and governance defined clearly, then we hopefully will be able to attract the long-term institutional investment money that is seeking for places where you can have cleaner options. We would like to finally take Pakistan Stock Exchange to the league of the sustainable stock exchange, which will also bring in a lot of good money. So we are working towards enhancing the corporate governance of the corporate sector because I'm chairing the PICG, and PICG and PSX are launching this collaborative platform with ACCA and ICAP as well as CFA. Thank you.